Let's continue with our discussion on the soft capex revival theme. And joining us right now, Tarak Patel from GMM Pfaudler joining in on the show right now. That said, I'm also going to quickly highlight what the earnings for GMM were like, considering higher depreciation has managed to hurt the PAT for them. Highest ever quarterly revenue, of course, is what they've managed to post this time around. And the EBITDA margins, they continue their upward trajectory of about 21% for GMM. Tarak, hi, good morning. Good to have you on the show. Firstly, wanted to understand how the glass line segment is currently doing for you, whether pharma demand versus specialty chemical and agrochemical, and how these three parameters are really shaping up.
Morning. Thank you for having me. So I think these industry segments are investing. They are growing. So for us, the order book continues to remain very strong. Over the last maybe 18, 24 months, we've seen chemical and, like you said, agro and specialty chem really invest heavily. But now what we are also seeing is that pharma is showing some kind of a comeback as well. So pharma is definitely picking up API, bulk drugs. There is this anti-China rhetoric. There is this kind of making ourselves more self-reliant here in India, and hence the Indian pharmaceutical industry is also looking to invest now, which is a good sign for us going forward.
Could you also help us understand how the acquisition in EU is panning out? What are the synergies that you're seeing flow through? And are you anticipating more orders from this geography?
Right. So I think a couple of things that have happened for us. I think we bought out one of our competitors in Hyderabad. So that factory is up and running since October. So we're going to get additional output from that to serve for the local market in Hyderabad and Vizag. After that, a few days ago, actually last week, we closed the transaction to acquire the parent, the Pfaudler Group. So that basically consolidates all the global Pfaudler revenues into GMM Pfaudler now. So really the size and the scale of the company will change significantly. There are markets where Pfaudler is not very strong in, Southeast Asia, Middle East, Africa, where GMM was restricted earlier. Now these markets will open up for us. So that's definitely an upside that we're going to do. Plus, from the capacity standpoint, we also commissioned 2 gas furnaces in Q3 actually. So that's going to help us improve profitability as well. So all in all, I think we are in a good the position to take some of the market share, kind of grow the business and really go after new business as well from our customers.
Okay, great. In terms of the kind of, segment-wise breakup as well, share with us that the glass segment, pharma demand versus specialty chem, agrochem, just really how you're seeing across pockets, engineering products as well.
Right. So I think historically, pharmaceutical has still been our biggest industry segment for glass lining. About 60% of our revenues would come from pharma. But over the last few years, we've seen that reduce significantly. So chemical has really been on a fast investment cycle. Chemical, like you said, agro and specialty chem have put up back-to-back projects. A lot of movement of production from China to India was driving this. Now we see a resurgence in pharma. So pharma is now up to 45. Nearly half of our business comes from pharmaceuticals. A lot of API plants, especially in South India, new plants coming up, new capacities. And what we are also seeing, which we haven't seen earlier, is the second tier pharma, the guys who supply intermediates into the bigger pharmas. Those guys are investing as well. On top of that, we've seen some kind of diversification as well. So many chemical companies who were predominantly in chemical are now also getting into intermediates. So there is definitely that going on as well. So all in all, I think both industry segments will remain very important for us, and we expect investment in both these industries.
In terms of the guidance as well, and on both revenues and margins, if we were looking at the following year, the full year, what's that looking like? Tarak, would you be able to share some numbers with us?
Yeah, so I think we've actually guided that on a full year basis, FY21, the combined group will be around 2,000 crores. Currently, GMM Pfaudler, until the transaction was closed, about a 600 crore company, so about 2,000 crores with about a 13% EBITDA margin. That's a little bit on the conservative side. We have synergies that are going to kick in as well. So we expect a good amount of improvement in margin profile as well. But yes, as a GMM standalone company, we expect the same level of growth that we've been enjoying for the last few years. Order book remains much, much higher than what it was same time last year. And what's also working quite well for us is that the global business of Pfaudler has seen a good amount of order intake. So like when we speak about India investing and becoming back strong, we've seen a lot of investment in pharmaceutical, both in Europe and the US, and that really bodes well for the Pfaudler Group international business.
Okay, and Tarak, just give us a sense as to what your outlook is as well when it comes to the overall price increases, given that whether or not you're looking at any price hikes in the next 2 to 3 months?
Right. So a couple of things have happened here. So the cost of our main raw material, which is carbon steel, has increased. We usually try and pass this on to our clients as well, because this is really not in our control. At the same time, we have cost reduction measures going on. So natural gas, which is one of the biggest uses that we use in the furnace, has gone down significantly as well. But as you know, so the need for glass-lined, the market continues to grow. There's limited capacity. So it is definitely the seller's market, I would say. So having said that, we will try and pass on the price increases to our clients as well. But at the same time, we have to be careful that, once we're trying to grow our market share, we have to be a little bit careful on that front as well.
Okay, fair enough. And what is the outlook on your expansion and the new furnaces? How's the new unit panning out, and what kind of benefits can you derive from this in the near term?
Yeah, so I think the new unit actually has done very well. It started up in October, had a good amount of shipment in Q3. We expect Q4 to be a very strong quarter for the Hyderabad, the facility. The two new furnaces in our plant in the Gujarat are up and running as well. So all in all, we have for next year around 3,000 EUs the capacity available between both. We are still looking at reorganizing and improving efficiencies. And now very soon we probably have to sit down again and kind of look at the next round of capex as well. That's something that if the market continues to behave as it has been doing and the investments continue, I think we would have to then add a couple of furnaces, maybe one in Hyderabad and one in Gujarat as well. And this capacity would again help us increase market share and cater to the markets.
On the capex cycle revival, whether or not you are seeing, an incremental pickup, and that now the post-COVID blues seem to be behind us to a great extent, and how is this going to aid your overall company performance?
Yeah, so I think there's definitely a lot of sentiment that is good sentiment around. I think people are now kind of taking more of an optimistic view. People who've been holding around investments are now finally going ahead and doing that. We're seeing that here in India as well. The demand is picking up. Our order book remains much, much higher than what it was. We expect new projects to come in. We're talking to both chemical and pharma for new projects and new investments. At the same time, like I mentioned earlier, the global outlook for the Pfaudler business also remains very strong. So all in all, we're kind of optimistic. We really believe that the next few years for our company going forward is looking quite promising.
All right, we'll let you go on that note, Tarak. Thanks so much for taking time out and joining in, giving us a view as to how the business has shaped up, whether or not you are seeing that incremental capex as well, and what the outlook is in terms of your financials.